Let's start by looking at the overall economy first. Okay. Last year, our economy grew about 4.7%, and going into this year, consensus numbers is banded around 5%. Right? But with the recent release of the quarterly numbers, some research houses have actually revised it up slightly to around 5.4, 5.5% already. So this is actually very positive. Okay. Now, at the corporates and at the company level, earnings last year was relatively flat, but the market actually moved up in anticipation of the better outlook, and because of that, market valuation currently is already fair. If you look at it against its long run average, it is actually trading slightly above its long run average already. So for the market to actually move higher, companies must be able to deliver earnings growth going forward. Essentially what I'm saying is that the market will be driven by earnings growth. Okay? So let's look at the company level in terms of earnings growth. If you look at the consensus number for the bigger companies, say the top 30 companies, consensus is looking at around earnings growth of about 7-8%. For the mid cap, let's say the next 70 company, I think consensus are looking around 10 to 12% for this year. And then for the smaller companies, generally below 2 billion, we are looking around 14-15% earnings growth. Okay? So now, if the consensus number holds up, then naturally there is a case to be made that the market can actually trend higher in line with the earnings. Okay? Having said that, also, another interesting point that we want to note is that if you look at the consensus number for going into 2015, okay, across the different segment of the market, means the big cap, the mid cap, and the small cap, earnings growth for next year is slightly stronger than this year. So that actually bodes well actually for the market.